Hey traders, Raghee here, and welcome to the Simpler Futures free video. So yesterday I talked about the bounce in copper. Today we're going to talk about the bounce that I'm setting up in the gold market. Now, whether you trade futures and you want to trade the GC, or you rather have less exposure and trade the micro gold, the MGC, or perhaps you want to trade options on GC or even the GLD ETF, the setup is all the same, and it is rooted in the main, or what I call the touchstone market of gold futures. So whether you want to go MGC, GLD, options on whatever, let's start with breaking down what's happening here. So first of all, April gold has pulled back to the 34 EMA wave. Now, why am I focused on the wave? Because we actually don't have propulsion dots, and the 34 EMA wave, by the way, is going to be your most conservative zone, starting with the 34 EMA on the high, then it goes to close, and then it goes to low. So that's what we call it the wave. It's all three moving averages. And the fact that we've sold off into that is why we've got this neutral blue grab candle. Now, let me show you an image here. Hang with me one sec. All right, so here we go. So this is actually a little infographic or doc that we use to understand what the grab candles, G-R-A-B, green, red, and blue, just an acronym for the colors, green, red, and blue, what they're telling us. Green candles are, regardless of the shade, light or dark, bullish, red, bearish, blue, neutral. So if I've got an environment of all this green and then I go blue, that sell-off is indicative of a correction and not a transition out of the uptrend. In fact, I won't see a red grab candle until we break down below 1542.10, which is the bottom line of the wave here. So if I know that I've got a correction of an uptrend, and here are two more reasons to look at the uptrend. I've got structure on the 8, 13, and 21 exponential moving averages. My wave indicator, my 34 EMA wave, is green. Everything about this says let's buy. Now, here's the idea I want to leave you with, because there's a lot of folks asking, okay, are we going to potentially get a rollover in the markets? Are we going to potentially have, say, a topping pullback in the ES or the NQ? Now, we do have the State of the Union coming up, and I don't necessarily want to fade the State of the Union, but nonetheless, there's a lot of things to be concerned about. Coronavirus, of course, means phase one. China might ask for some concessions. We're already hearing that phase one might be running into a few hiccups because of coronavirus. We've punched up to a very dramatic new high in the NQ. You know, a lot of folks want to buy puts. So let me give you another idea. You know, rather than picking a top, you know, we've been buying pullbacks, which has been working great. And not just recently, I mean, pretty much throughout the year. Buy pullbacks, find oversold support zones, and buy. All right. But here's another thing to think about. And this is where gold and even the bonds, which we'll talk about in the premium video, come into focus. This pullback represents the top half of the zone that I can buy in. So I would really recommend GLD calls. So I'm looking for what I would call an aggro position here, a more conservative position here. So this is the high, the close, and the low of the 34-period exponential moving average. From the high to the close, aggro zone, close to the low, the conservative zone. Buy the pullback with some at-the-money calls, or if you want and are comfortable with the entire distance of or width of the zone, you could even buy gold futures, but you're talking about from top to bottom just over $1,700 in risk. So why not go with, say, options or something more risk controlled like micro gold in the top half, and then maybe gold futures in the bottom. Again, something to think about. So rather than picking a top in the equities markets, how about buying the pullback in gold, even the pullback in bonds, because if the equities markets roll over, these two markets will be terrific trend following, right? Valid entries for their trend to follow, long positions that will benefit from that. Hope that helps. See you in the next update.